Good afternoon, everybody. Welcome to our session today of 5 questions where I'm interviewing Kerri Quigley from the Assurance Group. Kerri, great to see you again today. Why don't you give our audience a little background on yourself and your company?
Yeah, sure, Mike. So I'm with Assurance, which is an insurance brokerage. I'm part of our staffing practice, which has been around for the last 25 years. I have not been there for all of them, but I have been there for 13, working exclusively with staffing firms. And we have over 50 dedicated professionals working with over 600 staffing clients nationwide. And now that we are a part of Marsh McLennan companies, we're able to bring the power of the largest current insurance brokerage to our staffing clients. So combining our expertise with those resources is really powerful for our clients.
That's awesome. That's great.
Yeah.
So what I really would like to touch on today is, our whole world's been upside down for the past year and a half almost. Now it feels like. So I just want to go through a couple of questions with you in regards to that. I'd like to start with,
Sure.
how do you see how the overall liability insurance marketplace has changed over the past year?
It's painful. So the insurance market is cyclical, and we are currently in a hard market cycle. And in a hard market cycle, it's all sorts of pain. So rates and premiums go up rather dramatically, rather significantly. You will see carriers requiring deductibles and retentions to be increased as well, so that organizations have to assume more risk on their end. You also will see companies start really paring back coverage, adding in more restrictions, exclusions, taking away things that were broadly there before. And you'll also see them kind of do the same thing with limits and availability of what's there. So if maybe you've traditionally been able to get $10 million in an umbrella limit, your carrier may come back and tell you, well, this year we can only offer you $5 million. We're not willing to offer the whole 10 million, which means you could be going out and, trying to layer excess on top of each other, or in some cases, you may not be able to meet limit requirements that your clients are asking for. We've had more situations of clients simply not being able to obtain, in some cases, some pretty high limits their clients are asking for, with far more frequency than we've seen in, the 5-10 years before this.
That's crazy. I can't imagine how
It
these
is
are going to go up. So what niches within staffing do you think are going to be the hardest affected in regards to these changes?
Well, it's affecting the staffing industry as a whole. And it's affecting the entire universe of companies outside of the staffing industry as well. So we're in universally a hard liability market. When you kind of go into the staffing liability market, then all of a sudden you're talking about a really small universe of carriers that are writing business in that space and writing it appropriately for staffing firms. But within that, the medical staffing community is far, far, far worse hit than the rest of the broader staffing marketplace, and obviously just because of COVID. So they're sort of operating in a different marketplace than the rest of the disciplines within staffing are.
Okay, great. That leads right into my next question was how much of this change within your industry can be attributed directly to COVID?
So we were heading in this direction before COVID. So we were already sort of on the upswing, heading into a hard liability market. And I think the biggest factor that was really increasing that is nuclear judgments or settlements. So if you look at the maybe top 50 largest judgments that have been, rendered in court cases, and you look at them last year versus what they were 5 years ago, that average amount has more than doubled at this point. So when juries are hearing cases, the value that they're assigning to damages and what the perceived value of that pain is a lot higher than it was before. So when, judgments are really high, then that sort of drives where settlements need to be as well. So overall, the size of claims, especially for really large, really severe claims, is significantly higher than it used to be. And that's driving a lot of what you see in limit decreases and carriers really wanting to pull back there, because they're seeing that, oh my God, in some cases we're actually being impacted by, $10 million, $50 million, $100 million settlements, whereas it just wasn't as common before. But then, add COVID into the picture and it really, really escalated an already hardening market. It impacted some lines of coverage more than others. So there's a few that were particularly hard hit by COVID, some which seem obvious, others, maybe not necessarily as much. Obviously, I touched briefly on medical staffing before. Professional liability for medical obviously is being impacted by, COVID and, the amount of potential claims in, the handling of rendering medical care, especially as, we're still trying to figure this thing out. But you're also seeing maybe some lines that you wouldn't have expected to be impacted. So directors and officers liability, for example, they're seeing a lot of COVID-related suits because you're having lawsuits filed against companies for how are they managing the process of, protecting their employees, protecting the public, et cetera. So you're seeing claims with regard to like, how are you managing those practices and procedures and those duties to the public in the management of the business. So directors and officers liability rates are shooting up. Cyber liability. So two factors are really, really hammering cyber liability right now. One is just the fact that there's so much more remote work than we've ever had before. So without much warning or preparation, workforces shifted to have everybody, in a lot of cases, at home working on their personal computers. Systems are not as strong, protections are not as great. There are a lot of additional vulnerabilities that are there when you have a really large remote workforce. And then we also, when things get economically hard, you see predators take advantage. So the amount of incidents of cybercrime over the past year is tremendous. The amount of ransomware attacks that have happened in the U.S. alone, I think the U.S. over doubled within, just if you went from, I think, second quarter to third quarter of last year, it was crazy and high profile. We know an insurance company that got hit, a large HRIS system that, widely used within the staffing and PEO industry, ransomware attack as well. There were a lot of really high profile incidents within the last year. So cyber liability, impacted by COVID and then sort of indirectly impacted by situations that come out of COVID. And kind of further to that point with, economic hardship and what's going on, a lot of people lost their jobs. So there's a lot of situations where people are filing employment practices liability claims, alleging whether it's merited or not, wrongful termination, retaliation. I think the more that you see sort of desperate times, the more instances of claims, legitimate or not, you see filed against companies. So it was all these different impacts of COVID kind of coming at it from all angles, which took a market that was hardening and overnight just rapidly escalated it, maybe beyond what we would have seen otherwise.
Wow, it really makes the insurance industry, especially what you guys do, extremely complex now because there's so many different intricacies of what you have to look at on a daily basis.
It's a challenge, yeah.
I can't imagine. We see it from the legal side, from all the contracts with all the addendums that people are looking to make with the COVID restrictions and what we went through. So the next thing I want to ask you is, have there been any additional changes specific to the marketplace for staffing firms, even outside of COVID?
Yeah, so like I mentioned earlier, staffing has always been a really limited marketplace, and it's two different factors. So some of it is just carriers' unwillingness to quote in the space or to offer coverage because they really just can't get their arms around the fact that, employees are at a whole bunch of different third-party sites doing various things, various controls. Underwriters really work well with predictability and understanding of exposures and control. And in staffing, control can be a challenge with where your workforce is. So there's some carriers that just flat out are not comfortable with insuring staffing. And then, moving beyond that to the carriers that are, well, standard policy forms, unless you've really manuscripted them and endorsed them as filed forms specifically for staffing, because of that same issue of dispersed workforce, exposure to client property all the time. If you were to just plug standard policies into a staffing firm, their core exposures just wouldn't be covered because it's such a unique industry that you really have to tailor all of the policies to suit that industry. So of carriers that, one, are comfortable with staffing, two, have the forms that are appropriate for staffing, we were really looking at 5 liability carriers. And first quarter of this year, the 2 largest carriers became 1 carrier. So Philadelphia acquired Worldwide, which was managing was the MGA for the Zurich program. So, the 2 probably biggest players in that space became 1. So now we're down to 4 carriers. So anytime you're shrinking that universe of potential options, the market's getting tighter, the coverage generally gets tighter, the pricing gets tighter just because there's less competition in the marketplace. So not that we've necessarily seen anything dramatic happen with that, but it does, that's certainly a challenge. And then beyond that, and I feel like I have been saying this for a number of years without the premiums really catching up to it, but claims activity in the staffing industry on the liability side has been pretty rough over the last, 5 to 10 years. It's really started catching up. And the biggest issue that I see contributing to that, and Mike, you mentioned it with what you were seeing with contracts, what are you assuming contractually? The trend in contracts has been for the clients to push more and more and more and more responsibility on the staffing firms, even for things that they should in no way be assuming, but they are. And then their carriers are obligated to pay those claims if the coverage is set up appropriately. And then it's just kind of keeps spiraling and spiraling. And the loss activity has just made it really kind of upside down for insurance carriers in terms of profitability. So there have been a lot of premium increases, things we're seeing in a general hard market. But these things are being driven specific to, exposures that are being assumed largely within contracts. And how they're kind of bearing out in the claims history we see across the industry.
That's a lot. It's just amazing how much has changed over the past year. I mean, you and I have been doing this now together for 12 years, and we've been through so many different changes in the industry. It's insane. So what do you think the steps are that staffing firms can now take to reduce their employment practices liability exposure?
I'm going to sound like a broken record, but contracts are such a huge piece. And I know what you guys do at Becker is fantastic as far as, helping clients determine, what is and isn't appropriate for them to assume, coming back with potential provisions and modifications for staffing firms to suggest to their clients. But employment practices, liability-wise, we're seeing more pain in the industry with regard to the claims that that staffing firms are assuming for their clients' wrongful behavior. So let's talk about a situation where maybe a manager at the client site is sexually harassing a temporary employee. Staffing agency did nothing wrong in that situation. There's a sexual harassment suit. It's naming only the client company, but if the contract says that you're going to indemnify the client for suits of that nature, guess what? You're on the hook, and your insurance carrier is on the hook as well. I don't know for sure, but I wouldn't be surprised if I saw that coverage start being walked back or restricted or tightened, or maybe even not offered in the industry at some point if if the industry doesn't kind of take the trend of pushing back against their clients and having the conversation and saying, hey, this is why this isn't appropriate. We understand the co-employment relationship. We understand there's some things we should assume some responsibility for, but we can't control if your employee, does something wrong or illegal against one of our employees. That's not something we should assume. So I think until the industry starts really pushing back against that on a widespread basis, you could see that coverage be restricted and carved back until it becomes either extremely expensive or it goes away. I mean, in employment practices liability, it would not be unheard of to see your premiums this year increase 20, 30, 50, 100%, depending on what your claims history is. It's one of the hardest hit lines in staffing. And then moving aside from that contractual piece, and again, I think this is also something that you guys can help with and do help with. And I know that this is not really a widespread thing within the industry, but I would love to see it become more so. But, when we talk about workers' compensation and safety, there's a whole vetting process that staffing firms go through with their clients where they're asking about policies, procedures, exposures, et cetera. I would love to see something equivalent with employment practices where you're asking your clients how they handle particular certain things. Or they're, should you be concerned about wage claims because they're violating something related to the FLSA? Have they had issues with sexual harassment? Is there anything discrimination-wise going on? How do they really investigate and track those things? I would love to see the industry start really vetting their clients on the employment practices liability side, similar to how they do on workers' compensation. I think it would really help gain some control and also help the clients understand that there is, joint responsibility in those matters, and it's not just something they can push off onto the staffing firm because it's their employee.
No, I fully agree. That's a great point. And it really is, because the industry needs to evolve when it comes to that type of a liability. I fully agree with you.
I agree.
And then something you touched on before was the cyber liability. And, my question is what steps should these staffing firms, it's not can, but should they be taking to reduce their cyber liability exposure now?
Yeah, so interestingly enough, and I'm going to give this a little plug, but I will actually be doing a cyber liability webinar specific for staffing firms later this month. I believe it might even be next week. I can tell you that date. Yeah, this is really top of mind, more so than it's ever been. If you look at the cyber liability market historically, average rate increase is maybe something like 1% a year. I mean, not really a topic of conversation unless something extraordinary was going on. But we look at 20% increases at least on average for cyber liability now based on what's going on with claims. And there are a lot of things where companies need to be protecting themselves a lot more than they've been historically. But, you look at a cyber liability application and all the different, questions, controls, et cetera, that it asks you, and it's overwhelming. So I'm going to cheat a little bit here because I'm not an IT professional, but we do have a really great internal executive risk team that goes through a process called the Cyber 360 with their clients, where for free they'll go through your practices and advise what they think you should do differently just to protect yourself, not because an insurance carrier is asking for it. So I'm going to reference some things that they told me were the most important critical things for staffing firms that you might hear more about if you tune into that webinar. So absolutely implement multi-factor authentication. So, where you get the text message on your phone and you have to put the code in, where it's not just a one-step login process. You're going to want to ensure that your backup data is encrypted and protected. And then if you're storing confidential information on, laptops, so employees have laptops in their homes that they're working on remotely, you want to make sure that the laptops are encrypted as well. You also want to make sure that when security patches and updates come up on both laptops, work phones, et cetera, that as those come up, you're installing them timely because there are a lot of security issues that are exploited when people, okay, delay, install later. A lot of those patches are coming out because they're there to address potential security vulnerabilities. You want to also make sure that any RDS or RDP ports are secure. And then you probably want to have routine penetration testing performed by a third-party cybersecurity vendor, where they will actually go in and test your system and try to see where they can get in. What's actually cool with some cyber liability carriers is that as part of the underwriting process, they'll do that, and they'll come back and tell you if they found any vulnerabilities. So, in addition to just asking what you're doing, they're going to go out and test and see how far they can get and where your controls are. And then last two pieces are have some amount of routine employee training. And I know this can be hard with a remote workforce, but something regularly where this is top of mind and people know what they should and shouldn't be doing. Your employees are your biggest cyber liability vulnerability, and what they do or don't do is more critical than any system or protection that you have in place. It's all about human error more than anything else. And then have a breach response plan in place. If you get hacked, if you get locked out of your system, if there's a ransomware attack, what are you going to do next? Have that formalized so that, we're not all running around like chickens with our heads cut off, and
Yeah, I agree.
And if something happening.
Yeah, it's crazy because the amount of data that these staffing companies have and what's in their database, they've got to really be careful with this cyber liability.
Huge. Yep. Well, a lot of former employee applicant records. And what's interesting is that, a lot of them assume, oh, I'm using so-and-so software company or so-and-so third party. They're taking care of that for me. If you look at those contracts, they're not assuming that responsibility. That responsibility is on the staffing firm. So yeah, it's definitely something to dig into a little more.
Absolutely. So I want to look forward for, where we're at today and what you see tomorrow. How do you see the industry from your perspective and what you're doing changing and evolving or hopefully getting better?
I think the more consultative that we can be with our clients beyond just the insurance transaction, and the more that we can talk about how they're conducting business, their relationships with their clients, and be involved in that as necessary. I get on a lot of calls with my clients even to talk through issues around, you want this limit, what are you concerned with here? This isn't necessarily appropriate. Sometimes having someone who's a professional in an area can kind of step in and lend credibility to that conversation, especially if you can handle it in a non-confrontational, hey, everybody wants to get to the same page here, let's just make sure we understand each other kind of way. So I think a lot of it is going to be on, how can we really button up practices to be, best in class, best protected. So they're in a hard market, the underwriting process is, 10 times as difficult for way less, better results than you would normally find in the soft market. So there's a lot of legwork that's required on our part to really talk, not just numbers on a piece of paper or exposures, but to talk tangibly about what's happening, kind of tell the story of a company and what they're doing and what their practices are, right. And really gain that understanding. But I think the liability marketplace is going to continue to tighten over, I don't know how long, in the next 6 months, 12 months, 18 months. It'll get to a point where it'll stabilize, and then we'll start heading back into a soft market cycle. But a soft market is more drawn out, less sharp, so you sort of slowly slope down over time, whereas a hard market, very painful, sharp increase over a short period of time. I think as COVID becomes less of an issue, and I sort of hate this phrase, or new normal, but some of these things become normal and not abnormal. Once companies adjust to the fact that a lot of their workforces are going to stay, may not be going back to the office, may stay remote. Okay, then they're going to change the way that they're their computer systems and policies and procedures are around that moving forward, and it's not going to be this like unexpected event that we all had to adapt to on the fly. And I think that medical staffing marketplace will stabilize at some point. To be honest, that's a far worse marketplace on the workers' compensation side than it is on the liability, which is a little flipped from where it is for the broader industry right now. The broader staffing industry is not having a lot of pain in workers' compensation, and liability is the main topic of conversation and really the driver of rate increases where workers' comp has been stable. But for medical staffing, liability is painful, and then workers' compensation is even worse. So I think as the vaccine becomes more widespread, COVID is more known and understood, I'm hoping that over maybe the next 6 months, by fourth quarter, maybe beginning of fourth quarter, maybe end of fourth quarter, we're in a much more stable marketplace then. But the industry always adapts to change, and sometimes it's just a matter of really catching up to what's going on. And I think if companies take proactive steps to be protecting themselves, then we can convince insurance carriers that they should still offer this coverage. There are protections in place, et cetera. So the more you can do proactively, the better position you'll be in.
Kerri, this was fantastic. I cannot thank you enough for your time today. I really enjoyed listening to all this, and hopefully our audience can get a lot of information out of that. And if anybody ever has any questions or anything, please reach out to Kerri. She'll definitely be a great resource for you. Thanks for your time today, Kerri.
Absolutely. Yeah, thanks, Mike. I appreciate it.
Okay, bye-bye.